and welcome to another edition of the Harvest Podcast with me, Carmel Fisher. Today, I am thrilled to have with me Jonathan Baird, who is an award-winning money manager, the publisher of the Global Investment Letter, and a public speaker. Jonathan, welcome.
It's my pleasure to be here, Carmel.
Very excited to hear more about how you find yourself exactly where you are today as the publisher of the Global Investment Letter, but give us a little bit of a brief background into who you are, where you come from, and why this stance now.
I'd be happy to. I started as a money manager out of school, well, an analyst, and then a money manager out of school way back in the late 1980s. And I was lucky enough to have a bit of success in my career. I've managed several number one ranked funds and saw a lot of change in the investment business over that time as well. More recently, within the last 10 years or so, mutual fund company, a startup mutual fund company that I was with, was purchased by a merchant bank. And after that, I had a decision to make in terms of what I wanted to do with my career. And I thought that it might be an interesting journey to launch the Global Investment Letter as a means to share the experience and expertise that I've accumulated over my time in the investment business. And that started initially with a few intermittent posts I put on LinkedIn, which generated a surprisingly positive response that inspired me to actually launch the Global Investment Letter in early 2017. And I'm pleased to say that we have subscribers now on all continents, except, of course, Antarctica. And it's been a great journey, both in terms of being able to develop a community through the Global Investment Letter, but also to exercise an interest of mine in writing and so on. So it's been a very productive and enjoyable adventure up to now.
Excellent. I looked at your LinkedIn profile, of course, and there's something poignant that you mentioned there, and it's interesting because about just under 10 years is when you start with the Global Investment Letter. 10 years after the crisis of 2008, you mentioned that the issues like sky high debt levels have never really been properly addressed, and that they are lurking in the shadows, waiting to reassert themselves. Now, that's a scary thought. Can you tell us why you believe that, and what signals are out there that we should be aware of?
Well, we are living in somewhat scary times in terms of the number of potential economic and geopolitical catalysts for volatility that we find around us. The reason I made that comment about 2008 is because the great financial crisis, as it was called, the 2008, ended up generating a response from governments, both in the United States and in Europe and elsewhere, that created a lot of new debt as a means to cushion the effects of the economic shock. And I think that was the perfectly correct thing to do at that time. What became more of a problem was that the debt, once issued, was never actually addressed in terms of attempting to reduce it again. And in fact, I think governments and central bankers since 2008 have viewed the global economy as very, very tenuous and in need of constant support. And as a result, instead of seeing the debt, an effort to pare the debt down, we saw an era in the 2010s and even more recently of ultra low interest rates, which was designed to support the global economy. And now we're at a juncture where rates got to what I thought was a long-term normal level, but that's proving to be a bit problematic in terms of economic growth. And now we're seeing central banks cutting interest rates again. And while that might be notionally positive for the stock market, and for people that that hold debt. What it also signals is the fragility and tenuous nature of the global economy that I think ultimately is going to have to be addressed, whether we want to or not. I mean, governments tend to be very good at kicking problems down the road, but eventually problems cannot be ignored. And my own view is that over the next 5 to 10 years, we're going to see volatile economies and markets that are going to be a challenge for investors. But I would also say too that rather than just being a sort of a doom and gloom uh, sort of forecast, I think that these are issues that can be fixed and can be addressed, and the volatility that might pose a problem for investors in terms of risk will also present people that are prepared with some great opportunities. So I see sort of turbulent waters ahead, but that doesn't mean that they can't be navigated effectively.
Excellent and inspiring, right? Within this dynamic and the complex environment we're existing in now. And you did mention the geopolitical environment, the complexity of it. As an award-winning fund manager, what would you say are the most critical skills for successful global investing in today's climate?
I think one thing is just having the intellectual curiosity about the world to motivate ourselves to become better informed. I think intellectual curiosity is such an important aspect of life in general, but particularly I found in terms of investing. If you are curious about the world, you'll find it easier to embrace the notion of doing the necessary reading and thinking about what's going on in the world and the potential risks. I'd also say too that even if one doesn't have an interest in managing one's own investments directly every day and being involved, uh, having an awareness of what's going on in the world will allow you to make uh, better inquiries or questions of financial advisors if that's the route that people want to take. So I think the onus on all of us, probably given what I see as sort of the turbulent times that we can anticipate, is to be as well informed as we can be.
Enter the global investment letter, correct?
Well, that is a sort of a niche that's addressed to is I designed the issue to basically be an opportunity to look over my shoulder each month in terms of what I'm doing in the markets. So I do share my own activities and explain why I'm doing this and why I'm implementing the certain risk management techniques and so on that I found to be useful. I also update all of the major stock and bond and currency and commodity markets. So I offer my opinion on what's happening in the world uh, and try and couch it all within the context of geopolitics and market history. Um, and I do try and use a minimum of jargon. I try and write as clearly and in as straightforward a way as I can, because while there's a significant number of subscribers are other money managers, the rest of the readership tends to be high net worth individuals, financial planners, and professionals such as lawyers and physicians that are well educated, but they may not necessarily be familiar with the jargon that every discipline tends to generate. So, just as a courtesy to readers, if I'll introduce a new concept or idea, I'll perhaps in parentheses try and make an effort to explain what that means if it is if I do think it's a bit of a technical term. But otherwise, I do try and write as straightforward a manner as I can, as I say, just as a courtesy to the readers, and it's how I would want to read, a publication such as I write. So each issue, it comes out once a month, and it's typically running about 6,000 words a month with a plethora of charts and so on. So it'll run between 30 and 35 pages, but it's broken up into different segments. So if you have a particular interest in currencies or a particular stock market, it's got its own sort of page or pages devoted to it. So I try and make it as user accessible as possible. And I have to admit, I've watched the Global Investment Letter develop from the first issue to now, and I must say I'm pretty sure I've become a better writer than I was in the first issue. And so it's a work in progress, but I can take some pride that I do think it's steadily improving.
Excellent, and that's all we can ask of ourselves. I believe, just to constantly improve and change with the ever changing times. But you do cover all sectors as well as all exchanges. Is that globally or
Well,
within the
the major
US?
ones,
The
the
majors.
main,
Okay.
the major ones. Although, if something were to pop up in, in a market that I don't already cover, I'll include it. So I will introduce new ideas and new markets if I identify an opportunity. I try and um, cover all of the most relevant markets, and then within the context of that, try and tie in what they're all saying. And I find that way you can generate clues to what's happening a bit earlier than might be the case otherwise. And that it's just a pragmatic approach that I've developed over the years that has turned out to work quite well.
Wonderful. What do you see as the biggest threat to global financial stability in the coming years?
Well, besides the debt, which is a threat, but which in the short term can be managed by central banks, because as long as you've got a printing press, you can always defer problems to an extent until markets themselves uh, make it untenable. I think, for example, one of the things that I'm concerned about is the talk about tariffs, and you know, there are some uh, groups that are, advocating increasing tariffs. I don't think that's a good idea for the global economy or the domestic economy of the countries that are considering that. I, you know, I think the wealth that we have generated in the world largely has come about because of trade. And so with very few exceptions, I tend to advocate free trade. So if we get into a situation where countries start applying punitive tariffs on each other, that's going to serve to grind the world economy down, and that if nothing else would produce a global recession. That was one of the things back in the early 1930s that exacerbated the Great Depression, is that after the market crash in 1929, governments thought that they were being wise in protecting their domestic economy by implementing tariffs, and all that did was choke off trade and amplified the effects of the recession. Another thing that I do find somewhat concerning is the rise in popularity of far right political parties among in Western countries, and from a historical perspective, going back to the 1920s and 1930s, where we saw a similar rise in popularity, that clearly did not end well. There was a far right party managed to get some seats in Germany very recently, and so on. And while it's still not a major issue, it's a trend that I find somewhat disturbing. And Germany clearly is not the only country that's seeing a rise in popularity with the far right. I mean, France, there's other countries as well. So I'm hoping that that's a trend that will not, gain more attraction, because that's potentially a major problem.
So, in light of all of that, how can the individual investor best prepare themselves for these coming developments, good or bad? But what is the best practices they can adopt right now in
I
light of
think,
things to come?
yeah, I think the big thing is to try and be as well informed as one can be, and also not to be complacent. I find that a lot of people, when it comes to money, will, strangely enough, they'll be much more complacent about not, putting it somewhere, and not checking on how an investment is doing, or what the investment climate is like, and so on. And I think we're living in times now where that kind of complacency uh, is a luxury that we no longer really have. That you could have gotten away with it back, years ago, perhaps, but certainly not now. So I do think that being informed, whether it's the global investment letter, or something else. I mean, taking some interest in our own financial lives. And once again, even if you don't manage your money yourself, if you can educate yourself enough to ask intelligent questions of your financial advisor, I think that's a step in the right direction. And yeah, I guess try and shake off, the complacency that seems to exist with many people, and I think has become a feature of the financial markets over the last 10 years or so. There's an enormous amount of complacency that volatility is not an issue that will ever rear its head in a meaningful way again, and so on. And I disagree with that.
Yeah, I couldn't agree more. And you would think it would be easier to do just because of information so readily available, right? The only caveat is a very small one. It's just you've got to take an active role in actually reading and actually, ingesting that information. But it should really be a lot easier to do these days because a lot of it is at your fingertips and
Well,
fed
there
to
there
us.
there is, but to be fair, also is not all of it is of the same quality. And
Right.
that's a bit of an issue as well. So I think you have to identify, sources that are legitimate. I mean, it's like anything else, particularly in social media. Uh, the people, whether you're talking about vitamins, or politics, or financial markets, there are people that are offering opinions, but they may have widely varying um, qualifications to offer those opinions. So, for people that are looking for information, that's an issue, and try and do a bit of research in terms of who this person is that is talking, and whether this sounds right. And there are also, some tried and true sources of information, like, magazines like The Economist, or newspapers like the Financial Times, and so on. And while I never advocate just sort of believing everything that you read, you can take the facts that are offered, and create your own opinion. Certainly, as a money manager, I can get deluged by analyst research offering opinions on all sorts of markets, and the value I put on that research was just in the facts that they contained, as opposed to the opinion. My view is that I'll educate myself enough where I can sift through the facts and form my own opinion. Now, that's, for somebody that's new to the process, that's going to take a while, but it's well worthwhile. The other thing I would suggest as well is, if one has a real interest in investing, um, start a reading program on some worthwhile books on investing, and whether you go on Amazon for that, or if somebody wants to reach out to me on the Global Investment Letter website, I could send them I have a prepared list of books that I think are highly recommended, and a reading list that way. So yeah, I can't stress enough where just trying to educate ourselves on these things is so important.
Couldn't agree more. Now, you also speak of um, interdisciplinary knowledge. Do you have any examples of how insights from fields like psychology or history have informed your investment strategies?
Well, I mean, I'm glad you mentioned psychology, because I think that may be the number one obstacle that we all have that prevents us from being better investors, or perhaps being just better people in our daily lives, in terms of uh, how we think, and certainly with investing, there are so many psychological traps that we have just built into us as human beings that trip us up. And a lot of investing is counterintuitive from an investment standpoint. For example, oftentimes it's best to be buying when everyone else is selling. Well, that's very hard to do for almost everybody, because, as animals, we tend to be, follow the herd. Um, you know, uh, another issue or psychological uh, trap that people have, that I think we all share to a greater or lesser extent, is the ability to recognize or admit that we're wrong about something and change our mind. So, one thing I've learned is, you're going to be much better served by recognizing you've been wrong early on, as opposed to letting losses grow in a losing position, hoping that it'll turn around. Hope's another sort of thing that it might have. Hope and faith might have a role in religion, but it doesn't have a role in the practical world of investing. Um, and Another classic one is that if you own something and it goes down, you're going to wait till it goes back up to the price that you bought it at, to sell, so you don't incur a loss. Well, many times it never gets back to that price, and the stock or the bond or whatever you own, it does not know you own it. So it doesn't know it's supposed to go back to that price that you bought it at. So I think, in terms of the interdisciplinary, uh, is psychology is by far number one. It's something that I wrestle with all the time, in terms of attempting to remind myself, uh, you know, uh, to avert these psychological traps, because even after all these years, I'm as susceptible to them as anybody else. And we talked about sort of the effects of geopolitics. I think that plays a much larger role now in investing than it might have 20 or 30 or 40 years ago. And history is always a source, to me anyway, of lessons that we can apply to our lives, in terms of pointing the way. Because I don't think people have changed hardly at all in thousands and thousands of years. I think the problems that people had in ancient Rome probably was similar to what we have today. I'm sure if there were psychiatrists in ancient Rome, they'd be hearing the same problems from people that they'd be hearing today, And so that, it all, to me, one of the fascinating things about being an investor and having an interest in the field is that it does incorporate, um, aspects of all aspects of life, and so that makes it fascinating for me. Even aside from financial considerations, the intellectual challenge and so on, I do find fascinating.
For sure, I can totally relate. Now, as someone who's navigated various market cycles, what advice would you give to our listeners or any investors out there who are trying to distinguish between, as you clearly mentioned, the short-term market noise that we all as sheep sometimes want to follow, or understanding significant long-term trends? How do we navigate those two
Uh,
spheres?
yeah, I think one of the first things I can say is don't be focused too much on very short-term announcements. You'll sometimes see on financial news shows and in newspapers and so on, the unemployment rate is being announced tomorrow, and an update on the rate of inflation is occurring. I would not be too concerned about the initial responses to single points, data points. I think it's much more important to be looking at um, trends. So you're going to have to concentrate on how things are going over a period of time, whether it's months or years. But you do have to step back a little bit and try not to be too caught up in the short term. Um, I do think that you do have to pay attention to sort of general uh, trends and things and try and connect dots. It's I must say that for somebody that's brand new, it's going to be a lot to do because just like anything else, to really feel comfortable mastering something does require a bit of time, and there's more to it than you might think. But one of the things, as I say, is avoid sort of being rattled too much on very short-term isolated data data points, and pay attention to sort of what markets are doing in terms of just broad trends. One of the things that I set great store in is what I is was price action in terms of what the market is doing, and oftentimes it will tell you a lot just from and so just simple things like looking at like a 100 or 200 day moving average of a market. Is it going up? Is it going down? And so on. um, the other thing that I strongly advocate for people that to help prevent sort of sustaining major losses is to exercise risk management. Risk management is very important in producing better investment results. And one of the things that I do, which I do talk about in the global investment letter, is I use what I call protective sell prices. Whereas when I buy a position, I will also, while I'm deciding to buy it, I'll also um, analyze or calculate at what point uh, I want to sell that position if it goes down. I want to know at what point will it be telling me because of its behavior that maybe I made a mistake on this position. So once again, I do talk about that in the global investment letter in terms of my own positions, and I adhere to that. It's something I've learned to follow is the discipline of using protective sell prices. So risk management is also such a key thing, and it's difficult. It's difficult because it can be a complicated process. But those are my thoughts in terms of what somebody can do just sort of as a basis to keep them out of major trouble anyway.
Thank you. Very useful for sure. So looking ahead, and this will be our final wrap up for the interview. What areas of the global economy or any specific market do you think is underappreciated by mainstream investors, and why?
I I think right now, looking out, and none of these things would apply for the next, say, 2 or 3 months, but looking out for the next 2 or 3 years, I think small cap stocks look interesting. There's been such a focus on the Magnificent Seven, and before that, the FANG stocks, the big mega cap stocks, that the valuation levels of small cap stocks, specifically in the US market, has really been knocked down to, you know, certainly very attractive levels based on historic norms. And typically, when markets rise, small cap stocks tend to do well because smaller companies do tend to exhibit faster growth by virtue of their smaller size. The other thing that I sort of make an observation about is that the future Magnificent Seven stocks or market leaders often will come from the small cap group that we see today. As companies grow, they become uh, more dominant as market leaders. So, small cap stocks in the US, looking out over a few years, I think looking out longer term, uh, just as an investment core investment theme, I think emerging markets look very attractive. Selective emerging markets. I think that India for the long term looks very interesting. I think some of the smaller emerging markets deserve some scrutiny as well, because they have the ability, given their population, as well as the inherent financial leverage in the relatively low per capita GDP, to grow very rapidly. I mean, we saw what happened in China over the last 30 to 40 years when a nation with a large population who ultimately adopted more market-friendly policies, the remarkable growth that we saw in China. I think India could replicate that. Now, the one thing I will say with emerging markets, as I would with any markets, even in the West, is that one has to be mindful of political setbacks in terms of if you start getting adverse political developments that might cause um, economic policies to be counterproductive, that could ruin an investment thesis. But as long as in terms of emerging markets or any market for that matter, as long as the economic policies appear to be positive and are embracing a growth model for the economy, I think India and some other emerging markets look great. Small caps in the U.S., I think, deserve a lot of attention looking out over the next few years. And beyond that, if we see an upsurge in inflation, which is a threat, commodities might offer an interesting set of opportunities in the years to come. But a lot of these ideas are based on catalysts falling into place that make them that make them attractive opportunities. They haven't all happened yet, but I'm anticipating that they might, and it's something that I'm watching for.
Wonderful. Where can we find the Global Investment Letter? Please give us a link.
Our website's globalinvestmentletter.com, and there's a little tab on the front page where you can get free sample issues. I just ask that you leave your name and your email address, and along with getting access to a bunch of sample issues of the Global Investment Letter, you'll also receive a weekly investment comment that I put out. You can unsubscribe to the investment comment at any time, but it sort of comes with the free sample issues. There's introductory video. There's there's some other resources on the website, and yeah, so I try and make it as user friendly as possible.
Wonderful. Thank you so much. Reach out to the Global Investment Letter to stay abreast of factual information, moving our markets with Mr. Jonathan Baird. Thank you so much for being here.
Thank you. It's my pleasure.
You're very welcome. This is the Harvest Podcast with me, Carmel Fisher. Stay tuned.
And you're listening to the Harvest Podcast, available anywhere you find podcasts. Stay tuned for more.